Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the S&P 500 ETF, ticker symbol SPY. And as I do each and every week, I've left my lines on the chart from last week's report so you can see how the forecast panned out. And as you can see right there, we had a resistance line that was drawn from this high back there in December, and while the market tried hard to break out and stay over that resistance, it failed to do so, and we pulled back, and we're currently on our way back to that 20-period moving average. Another thing that we're seeing is really mixed signals. While today we had a little bit of recovery towards the end of the day, the stochastics are crossing with the sell signal. So what does that mean for next week? Well, I'm going to erase all of these lines, and I'm going to draw what are known as flat lines. We're probably going to test the 20-period moving average as a support level, and this resistance from this week is most likely going to hold into next week. So my forecast is going to be a little bit different than what we've had. I think we're actually stuck in a sideways trading range right here. We see the volume kind of flattened out. There's no real directional indication that we're getting from volume. And these candles, with this being a doji on Wednesday, this being more or less a hammer pattern on Thursday, and now the green candle, we're probably going to stay right in this range into next week. So until we break out of resistance or break out to the downside through support, we can continue to expect a narrow trading range right there. Now, with that said, let's look at the VIX, because volatility index is a leading indicator for the S&P, and I said we would most likely bounce off of this key support level. We did that. However, we have not reached this target just yet. And we're getting a buy signal on stochastics right here. I said we would start to move up. That's what that diagonal line was meant to be, a forecast from last week's on the volatility index, so I'm going to erase that. We're probably going to continue with this cross on the volatility index, and I think we'll still move higher. However, we're going to be stuck in a range as well with the volatility index. So I'm just going to extend this out and more or less identify the trading channel that we're looking at here for the VIX. So expect that to stay right in this general area. Now on the Russell 2000, which is a more broad-based index, I said that there was a good chance we would break down and break below that trend line. We did that. And so the stochastics are crossing on the Russell 2000. That's a sell indication right there. I'm going to leave this line in place just like that. I think that we could still go a little bit lower on the Russell 2000. I don't see any key support levels just yet that I could identify to keep this one in a trading channel, but the signals are showing more bearish than bullish on the Russell 2000, so I'll leave that the way it is. Now, if we look at the Qs, that's the NASDAQ market. QQQ, I said we would move lower. We did that. To test the 20-period moving average, I think we're going to go a little bit lower, and I'll leave that target right there, but I think we're going to, again, like the S&P, stay within a trading channel. I think we're stuck with the 20-period moving average being more or less a support level, and I'm going to leave this right here from the high from this week as a resistance point. And again, until we break out of either of those lines, we're going to start to move sideways and continue to move sideways for a little bit of time here. So keep that in place. Now finally, the diamonds. I left this one for last because as you can see, I've been talking a lot about this former trend line, which was the accelerated trend line from 2016. And we have gone over it, and it looks as though that line is now going to act as support once again. So this has really put us in a tough spot with regard to forecasting because, again, we're stuck in this neutral pattern. And so I'm going to identify the support being this gap fill level right here, which matches up with the 20-period moving average, and this high from this week, which is going to be our resistance point. So we're stuck right there in that trading range as well. Now, this is music to the ears of any of the option traders, because a lot of option traders who do spread trading, particularly those who do calendar spreads, they want the market to go sideways because they make money from time erosion. And again, for option traders, that's money in the bank. And they're very happy to hear that there's a possibility we could be in this trading channel for a little while. So that's our forecast for this week. Hope you're having a good time in the markets. I know it's a little frustrating for investors with the added volatility, but for the swing traders and the option traders, this is really a field day of a market because the markets have been so technical with their signals. So stay tuned to the market, guys. Go to our website, visit that, and we'll stay in touch. Have a good weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.